Welcome to the Marketecture podcast. This is episode 5. I'm very excited to be here. This is Ari Paparo. I'm here with Franchi from Aperium Ventures and our special guest, Patience Haggin from the Wall Street Journal. Patience, thanks for being here.
Thank you so much for inviting me, Ari.
So probably many people in ad tech have read your bylines and have seen you at conferences and talked to you. Tell us about your beat. You're covering Twitter, Google, Comcast. What else?
Well, I cover digital advertising, it's fun because it touches everything, and it's a whirlwind. It's a cyclone that touches everything. And it's just been in so much upheaval over the past 4 years while I've been covering it. I've had a blast. I've learned a ton. And I don't know. I feel like I'll never be the same just in terms of my nerves, yeah, I'm sure I'll never be the same.
What a great summary of working in ad tech. I'll never be the same. My nerves are shot. This is Eric, by the way.
Yeah, Eric, I had the same reaction. So, I mean, do you think it's a harder beat than, if you had to cover oil and gas or something like that?
Yeah, because it changes every 6 months. It's like covering a totally different thing every 6 months. Oil and gas, I mean, how does that turn over and reinvent itself over and over again?
I guess maybe Elon Musk would take the place of the OPEC leaders or something like that in that story.
Yeah. I mean, you have him parachuting in from not having even been in ad tech, and then, oh my God. Whatever.
So what are the biggest stories going on? I think we could guess, but I'd love to hear your opinion. What are the biggest stories going on in digital advertising right now?
Okay, so we'll just knock out Twitter first. As some people in the industry like to point out to me, hey, it's really not the biggest ad business. Why are you spending so much time on it? But Twitter plays an outsized role in politics, not just in the U.S., but around the world. It's absolutely a key strategy for how our leaders communicate with the people. They monetize through ads. Elon's putting it to the test of, can it still monetize through ads even if you reduce the content moderation, by a lot, even if you try this revolutionary strategy. So that's just a fascinating test case there with huge consequences for democracies around the world.
I guess let's just go on that one for a second. I'll let you get to your next story. So I feel the roller coaster of Twitter.
Here we go.
2 months ago, we're all sure he's going to kill it, and then there was sort of this détente over the last month where it seemed, well, maybe Twitter will be okay. I don't know. And now yesterday, as of the recording, they had a pretty big outage. Should advertisers care about any of that? Maybe it's a question for Eric also. Why do we care? If the ads work, we should buy them. If the ads don't work, we shouldn't.
Yeah, I mean, that's basically my sentiment on this one. I think Patience has a great point in that for a lot of reasons. I think we all want Twitter to exist and be a viable service. I think step one that Elon made, which was, certainly controversial, but cutting costs massively, was the right move to at least start, the path towards sustainability. It then also had knock-on effects, which, obviously Patience and others have covered with brands pulling back because there's less sales coverage and, there's less sort of engineers that know all of the back end. So you have some outages and everything like that. But the bottom line is, Twitter is unfortunately for Twitter, not yet a must buy. The ad product, in an era where, performance becomes, paramount, is not built for performance. So yeah, it's I think at the end of the day, if Twitter drove performance or, had a great ad format that was designed for attention and video, so on and so forth, advertisers would buy it. I think that's where a lot of the work needs to be done.
It's a Tesla car crash that we can't stop watching, I guess.
Why you have to bring up Tesla again?
Touchy subject.
I'm never going to live this down.
All right. So Patience, what's next on your list of crazy stories you're following?
Okay, do you want to hit Google next?
Yeah, let's hit Google next.
Yeah, they got a little bit going on over there, not totally quiet. It's just fascinating the way antitrust authorities are scrutinizing their ad business. And some would say finally scrutinizing it after just letting it flourish wild and untamed, untrimmed, unharnessed for so long. I'm really interested in the DOJ complaint. You're the perfect person to drill into it. And I've really enjoyed reading your commentary on Twitter and other places, Ari. I'm just absolutely fascinated to see how it'll play out. And if parts of Google's ad business are divested, that would just be a monumental shift for the ad industry. It's like, if the U.S. divested California, do you think that would change the politics of North America? Hey, this is just a big thing that's about to, that could really shake everything up in a year or two.
Yeah, I would definitely start with Florida if we had to do divestiture.
Patience, I actually have a question on this, and maybe just given the breadth of people that are not like ad tech product and operations people, you might have a POV or some intel on. So this was a deal that the DOJ approved. They approved it 15 years ago. The idea of this now being walked back and, essentially sort of like saying, no, we should not have approved this 15 years ago, when we were supposed to have done all the work and, thought through all the scenarios, people in my line of work are fairly concerned about that, right? Because it's like, that will then have a potential, freezing effect at worst, or, sort of cooling effect on, large scale M&A, right? If, M&A deals have a thesis that this can be, a 5, 10, 15 year transformation for a company, but it could potentially be, sort of like walked back and, and stopped or reversed. People are, I think, rightfully concerned. Have you heard of anything, sort of like any conversations around that?
I think that's a fascinating story to look into, is like, does it change what deal makers think they can do? Does it change the way they contemplate the possibilities? I think just the discussion about it has already had a chilling effect on big tech acquisitions for the past few years, don't you?
For sure. Why are you going to, put billions of dollars, tens of billions of dollars in some cases to work when, you can just be forced to divest and change and, reverse course it. These are obviously for the largest companies contemplating the largest acquisitions, but, again, that's a real driver of investment. That's a real driver of M&A. So, I think, it's definitely worth looking into that one specifically because it can have implications.
It's also quite a miss, if I could just jump in here, which is that during the DoubleClick acquisition, I was an employee of DoubleClick, the investigation, it took about a year to get approved. It was entirely focused on search, the investigation. The only thing that was objected to was DoubleClick owned a search agency called Performix that it ended up having to divest as part of the acquisition. And that had nothing to do with the synergy of the deal. Google had no interest in any of our search business.
Total mess.
It was a total mess.
It's unbelievable.
Now, in retrospect, I don't think the deal should have been stopped. I think the deal was fine. I think it's the subsequent behavior that's kind of the bigger issue. Is anyone paying attention to the other antitrust case, the search one that's further along and is going to trial this summer?
Yeah, of course they are. It's just this one, reporters are like, they have the attention span of gnats. Like you throw something new in front of their face, they have to chase after that. And then they come back, they come back months later and they're like, oh, what? Oh, there was another suit. But yeah, absolutely. I think that's going to be a fascinating trial. Maybe one that strikes more at the heart of Google's power, don't you think? I mean, so a lot of people see a scenario playing out where Google settles the more recent complaint by agreeing to divest those businesses. And that is almost like a sacrificial lamb that might maybe even help them protect the dominance of search.
I've been a big advocate of that. I think it's actually would be a very smart move for Google to divest their network business effectively. It's the slowest growing, lowest margin business they have. But I think the search lawsuit, which I haven't been following as closely and I haven't personally read the complaint, but I think the crux of it is that the Department of Justice is trying to prevent Google from doing these distribution deals with Apple and Firefox and other people like that because their outsized market power means they can price out Bing or other competitors from getting those deals. And that could have just an immediate impact on Google's finances if that were to be limited, their ability to do those deals.
Those are really important deals for them.
Actually, I just wanted to ask you about something you tweeted, Ari, about Google before we move on.
Oh, God. What did I say?
Move on to the whatever fresh new hell awaits. I think we all know. Part of your tweet storm on the DOJ complaint, you pointed out that it doesn't call for any buy-side divestiture. And I believe you suggested buy-side divestiture might be a preferred outcome for Google. Why do you say that?
Yeah, I have second thoughts about that. But yeah, just as background here. So, the complaint talks quite a bit about the buy side, about DV360 and about, Google Display Network as being participants in various schemes, like Bernanke that, Google's accused of being anti-competitive. And yet the complaint does not ask for any remedies on the buy side. They only ask for divestiture of the sell side. I think I made the point to you, and it was quite a good soundbite, that DV360 was the unindicted co-conspirator in this case. Mm-hmm. I'll just repeat that because I'm just so happy with myself for coming up with that.
I love it.
So
get a bumper sticker.
The ad tech influencer.
So I did make that point in Twitter, but I actually don't think it's as true as I did when I tweeted it. It's a little more complicated, where the way Google thinks about it, I'm projecting here, is that they have this effectively monopoly on the sell side, and they think of that as kind of like their farm to farm, or their mountains to mine. And then they use it to the benefit of their buy side, where they're able to move margin around and make the display network and DV360 more effective by letting those bids win more often or capture more market share. And so it is a kind of a two-way dynamic there. But the buy side is, very large and very profitable and probably growing faster than the sell side. So I kind of take back my sentiment about them wanting to get rid of the buy side.
Okay, that's
all right. So Google, we have what else? We have two antitrust suits, and then this week was a fun week. So I'll just jump in here. So Google effectively tried to outrun Microsoft with a vaporware announcement of a new AI. So I think the timeline is, today is Thursday that we're recording this. So on Wednesday, the OpenAI folks were up in Redmond about to make giant announcements with Microsoft. So on Tuesday, Google put out a very long blog post about how fantastic their chat AI is, and it's called Bard, and you can't see it yet. It's in testing. I think this is a pretty classic, vaporware announcement rushed out at the last minute, but that's my opinion. Patience, what's your take on it?
That it was rushed out? Yeah, I agree. I mean, I thought it was just a really funny thing that, Microsoft CEO Satya said shortly before their announcement. He said something to the effect of, "Today Google is going to dance, and I want you all to remember that it was us who made them dance."
That's savage. He is savage. Absolutely savage.
Yeah, but in terms of what they're putting forward, like there were some flaws. Those flaws showed up. People are already pointing out the flubs. Everyone is also just kind of in awe of like what this could mean for the future of search.
Yeah, Google's market cap went down by $100 billion yesterday. I saw a tweet. I can't confirm it, but I saw a tweet that it was the single worst day for their stock ever, except when they had an earnings announcement that missed or something like that. So is this that big of a deal? Like, Google has been sort of a unstoppable force in search, at least for, a decade. I use it hundreds of times a day. Is this a real risk to them? Eric, you want to take that one first?
Yeah, short term, this is an overreaction. This is an overreaction by Google, presumably, right? They should have been more measured and thoughtful and strategic about how they respond to ChatGPT and OpenAI. I think this is clearly an overreaction by the market, taking $100 billion off the market cap for, sort of like flubbing and putting something out the door when the core business is still so strong and throwing off so much cash and will for the foreseeable future. I think that's an overreaction by the market. But absolutely, long term, this is the first real threat that we've seen to just the core of search and how search is done and the implications for it. And, the users being so excited about a new way to do it that we've ever seen. ChatGPT is the fastest growing consumer app ever. In, the short time it's been out. I actually don't even know how long it's been out now. It's reached over 100 million users. We haven't seen anything like this before. So obviously, it hit the code red at Google and everybody's scrambling. But, I think this is a long-term game, at its core, getting people to change behaviors and delivering an awesome product experience, everything like that. I think we can all see it. I just question if it's worth taking $100 billion off the market cap of one of the, best companies in the world.
it's really early. Like basically, are consumers going to be typing in paragraphs of prompts into a big box and getting results? Or is there a lot more product shoes to drop here about the ways consumers interact with this general type of technology? Patience, what are you hearing in the market? Are people overreacting, underreacting?
They're reacting. I think I agree with, I guess, what Eric said. It does seem like a bit of an overreaction to lose that much market share over, what is a transformative technology. It's just not perfect yet by any means. And then honestly, if we could look back at history and look at some technologies that came out with a lot of bugs and still proved to be transformative. If you remember the first demo of the iPhone, it still didn't properly work. They were just obviously demoing it even though it didn't work, right?
Yeah, and it probably took a couple of years before most mainstream consumers really got why the iPhone was so transformative.
Yeah, every great company has products that just they wish they never would have rolled out, right? Like go back to Facebook or Meta and Beacon, go back to Amazon phone or the attempt at a phone. I mean, you need to take big swings and some of them don't work out, but over time, those companies obviously executed and, their core businesses remain fantastic.
Yeah, I think there's a lot of stories here. There's the story about just will consumers adopt this type of technology versus keyword kind of searching, or the early adopters are absolutely saying yes. There's a second story about can Google innovate? Then the third story, and this is one I want to spend a little time on, is how much of a threat is this to Google's advertising model? In my point of view, I'll just give it right to the start. I think it's a very big threat to their advertising model. And the example I like to think about is if you're planning a trip, travel is probably the most lucrative vertical that Google makes billions of dollars a year on. Planning a trip, you might search for flights and for hotels and for things to do. And every time you do those searches and click on some ads, Google is just, ringing the cash register. And it's painful and it could take hours to plan a family trip. But Google's making money every step of the way. They're making money partially on the inefficiency of the process, partially on the efficiency of giving me the answers I want, but partially on the inefficiency. And in the new world, you type in or say to a prompt, I want a family vacation for under $1,000 a night and somewhere warm on these dates. And it gives you an answer. And potentially you're still making money because the hotels and the flights that are booked by this AI are all paying fees and things like that. But it could be vastly more efficient. And it's a different kind of model. It's not bidding on a keyword. It's like affiliate. It's like having deep partnerships with airline companies and with, hotel companies to get paid when the AI recommends it. It seems like it's a very different experience.
Yeah, I totally agree. And, this is where it gets exciting, obviously, for somebody that invests in this stuff and, looks for transformation. I think, the points you made were great. I agree with them. I sort of also think about it from the perspective of Google's core business was built for a desktop search world, right? That product, has been iterated on for many years, but that's its core. And, it's adjusted somewhat for mobile. And then, there's, obviously it's infused in things like maps and travel search, so on and so forth. But if we're at the beginning of an era where the way people search change in terms of, asking questions, being a little bit more directive, expecting a singular and best response, I think that's interesting. No longer a wall of responses that you need to figure out, which is the right one for you. No longer 6 different ads, right? It's like, what is the best response for me? I think that becomes interesting. I think number 2, as people start to, perform searches across different devices, again, it becomes about what is the best answer, because I'm not even looking at anything right now in the case of voice search or Siri or all these home devices. So yeah, I think this entire thing is up for grabs, and who knows, Google could end up innovating and acquiring and, sort of adjusting over time, but it's never felt, so right for right. Another company, another technology. And, this is a giant business, right? Like the performance marketing business is bigger than the television business. So this is so exciting.
Well, you said acquiring, but that is an interesting problem. So let's say somebody else innovates and creates the ultimate travel AI planner with affiliate links and makes lots of money, and Google wants to acquire them. It doesn't appear like Washington or Brussels or wherever is going to let them. Patience, what do you have a take on this situation?
My take is like wandering around in a state of frenetic fascination, asking people like you for their take on it and asking people in power what they plan to do about it.
All right. I think there's another angle, which is, Microsoft coming out really strong this week with all their announcements and the Edge integration, et cetera. But it's not necessarily Microsoft's game to lose. They're taking the first shot, but I think there's going to be quite a bit of activity trying to capture the consumer's activity and making sense of it.
Yeah, they've got momentum behind it. Between Satya and Sam Altman, I mean, they are being aggressive. Some of the one-liners that they're dropping, like evidenced by what you said earlier, I think Sam said something, Google is a lethargic search monopoly. It's like, holy cow. and these are two, mega geniuses with mega resources teaming up with each other to take on Google. This is exciting.
There's also been reporting, I think Kara Swisher talked about this in her podcast. I can't remember the source, but there's been reporting that Google in the past has really struggled with the idea of creating, non-click-based advertising around things like travel, that they know that consumers are sort of dissatisfied with the current model, but they have this massive innovator's dilemma where they will lose money if they improve search. And this may be the thing that forces them to do it.
Imagine if affiliate marketing becomes the wave of the future. I mean, the core, just rinky-dink 1996 business model makes a massive comeback.
There's no new search ads model, not a new format for search ads. You just search ads will have to seed to something else.
They're kind of recommendations. Using the travel example, the AI could just say, here's what we recommend. Click here to book this hotel. It's closer to affiliate than to advertising, because if the AI is not going to recommend the wrong hotel for you just because they have a higher bid, or I don't think they would. Maybe I'm naive. All right, so we've beaten Google to death. That horse is dead. So back to you, Patience. What else are you covering? You've quite a bit in the Comcast cable TV, CTV world.
That's right. That's absolutely right. I've been covering CTV for a few years now, and recently started covering Comcast and Charter as well for the cable distribution side of things. But I'm really interested in kind of the CTV wars we're seeing now, like Roku versus Fire TV versus Comcast and Charter trying to make a bid against them with their joint venture Xumo. Everyone's fighting to be kind of that gatekeeper for the streaming services.
Is the crux of the competitive issue, consumers and their subscriptions to content, or is the ad tech important in this model?
It's all about ad tech. I mean, the growth that Roku's been able to brag about for the past couple of years, it's been driven by the strength of their ad business. That growth is slowing now. That's something they've been candid about with Wall Street, and we're going to hear from them again next week to see how that's going. I think AVOD is the next frontier for ad growth, and it's all going to be about who's going to reinvent that ad experience, get those TV dollars over to digital.
Right. So you start with the consumer, you sell them a Roku box, and then you get the viewership, and then you invest in ad tech so that you can not just monetize with plain advertising, but an efficient, pseudo walled garden around those consumers. That's kind of the play. Which player do you think has the strongest? Well, I'm a former employee of Freewheel and Comcast, so I'm a little biased, but I do think the Freewheel stack is very impressive. Now that they've always been the leading ad server in CTV, and now they have Beeswax, which was a pretty powerful DSP. They should be able to make something of that, and it's a pretty big business as is. I think Roku, with its acquisition of DataZoo, also has, a very high quality DSP as part of their offering. We interviewed Roku. It was one of the most watched episodes in the history of Marketecture TV, so you should check out that on Marketecture TV. There's a free version as well as a paid longer version. There was some news this week also. Brian Barletta, our partner at Sounds Profitable, wrote an excellent newsletter and podcast about Spotify and its investment in ad tech, because the podcast advertising world also has some of the similar problems, which is it's hard to advertise, hard to get the tech work. But Spotify kind of building their own extended walled garden with ad serving and server-side insertion is another kind of trend that seems to be happening. So it all kind of starts sounding the same.
I think it's interesting on the Spotify front in particular, and we've talked about this, a little while ago. podcasting, while, it's interesting and people love it from a consumer perspective, it's still a relatively small market, right? It's a $2 billion market. I think, there's vectors for growth there for sure. But the overall shift from terrestrial radio, I think it's, properly called, to streaming, I mean, that's probably a 10x market size. So I think, Spotify investing in ad tech to, get ahead of what is just a wave of increased consumer adoption and subscription fatigue, and the opportunity to innovate on monetizing, what is again a sort of, kind of wall that's increasingly, becoming ad supported with audio, seems like a great move to me.
I think it's a big opportunity there. That's why we started covering it as part of Marketecture also. Let's talk about some of the latest news other than the big AI announcements that came through this week. Criteo, there's some rumors, some reporting on Reuters that Criteo was looking at strategic options. This isn't the first time that they've gone down this route, and their stock is at kind of all-time highs, or at least 52-week highs. A lot of people are kind of scratching their heads as to what's going on here, because Criteo appears to be doing pretty well, multi-billion-dollar public company, but maybe testing the waters a little bit. Eric, any thoughts on that?
Yeah, certainly just speculating. I think there's certainly, you just hear about the potential private equity roll-ups that, are being planned, being, discussed. Those are real. They're out there. There's, a lot of dry powder on the sidelines, particularly from a private equity standpoint. And I think a lot of smart investors that have a thesis on the space. And, Criteo has, I think, a pretty good offering when you think about its positioning around retail media and the future of retail media. So, if you're a PE firm with billions of dollars to put to work, you'd like an anchor to build around. You have a thesis around, what are the highest growth markets? It's one of two things, right? It's retail media, commerce media, or it's CTV. So, you can have I think a great anchor with Criteo, being in sort of your first or your core deal, from there. That said, the stock is expensive. I think, it's trading at a PE north of 20, and folks think that, it gets taken out for a much higher. So I think that's the real question there. But, yeah, for sure. I think, PE, wants to come into the space, sees a great opportunity, and Criteo is a logical anchor for a retail media open garden approach.
Yeah, some folks on Twitter, once again, all the content on this podcast is basically sourced on Twitter, but some folks on Twitter were saying, well, this is bearish for retail media because Criteo's representative of retail media, and if
I couldn't disagree
can't
more.
Make it.
I could not disagree more, but go on.
No, please. Because we had Connor McKenna from Luma here a couple weeks ago, and he was talking not endlessly, but excitedly about how great retail media opportunity is. And Eric, you seem to share the same point.
It's much the opposite. The fact that, there's some interest on Criteo is validation that, this thing is just getting started. Infrastructure to power the next 100 or more retail media networks, is yet to be a winner in that game. Extend that out to not just retail media, but, just first party networks, a la Uber, a la Lyft, a la Instacart. They all need sort of modern infrastructure. So, no, I think it's a massively bullish signal.
Isn't it almost surprising Criteo hasn't got bought yet? Because we've watched retail media be such a hot space over the last few years. Criteo's value was always there. And I mean, I gotta think they've been getting a lot of interest over the past few years. I know they've been getting interest for the past few years.
Yeah, my guess is that they really need to split up the retargeting business and the retail media business to get the value out of both, and they think they have to go private to do that. That'd be my guess, but I don't know of any information.
That's a great point.
So the other news this week, and we'll finish off on this, State of the Union. So President Biden had a very eventful State of the Union. But aside from the stuff that got covered in the media, there was also an ad tech angle. So I heard some excerpts. Basically, he called for big tech to be regulated, for the big tech to stop targeting our children with ads in various forms. I'm not sure exactly what those policies were that he's proposing, and then specifically called for a data privacy bill. I think this is kind of interesting because It seems like everyone actually wants a data privacy bill, but it doesn't seem to be happening. I think the industry wants a data privacy bill. Patience, any thoughts on that? You're hearing anything about how people feel about this?
I'm hearing everyone just loudly agree with it. I haven't seen a single person kind of resist it. Even certain people at the IAB who sometimes react strongly to the privacy charges haven't seen anyone stand up and say that they oppose it. It's in the kind of rhetoric that everyone kind of supports, like greater privacy for children, etc. The whole federal privacy bill, it's just starting to be deja vu for me, because as long as I've been covering this industry, ever since 2019, I've heard people say this is the year Congress will pass a federal privacy bill. When will it finally come? It's just my big question.
It's one of those things where everyone wants it, but it's really dangerous, because if it's written poorly, it could really cause an undue amount of burden on the whole media and advertising business, which is a big part of our economy.
I'm wondering, have we taken enough time that we can learn from GDPR? We can learn from the examples of other countries, or are we just going to kind of embark on our own way?
Ideally, we would learn a lot from GDPR, because GDPR has been pretty effective in a lot of ways, and it's overburdensome in certain ways. And I think, people can look at it and come up with some pretty good learnings. I'm worried that no one will actually do that, and they'll just copy like the California law, which is, a bunch of nonsense written by people on Reddit.
I read this. I did not watch it, and I didn't read it in its entirety, but I read, I think the pulled quotes around this. And I had a completely different take, actually. I read this, and it was about protecting, our children's data, protecting. There was something. It was not just about data, but it was about mental health and the rise in depression and everything like that around children. I read this as being squarely about TikTok, and maybe it's because I'm sort of like thinking about that in general, because I think that's another sort of like interesting discussion we can have in terms of its rise of an advertising business, and the fact that there's some folks that believe it's sort of a giant surveillance tool by the CCP, and or active sort of like war by the CCP in terms of the U.S. gets one version, and the Chinese children get a far different version that's about education and not funny dances and everything like that. I read that, and again, maybe this is just sort of like it's on the mind. It's the green BMW theory. You see a green BMW once, you start to see it everywhere. I read that as like a comment about TikTok, and maybe a little bit of a nudge towards the CCP. I could be completely wrong here. I could be a conspiracy theorist, but that's what I read.
I think you have great spidey senses, Eric.
Yeah, I think there's definitely something there. And I think Josh Hawley, the Republican troll in Congress, he proposed a bill that was very focused on this. Like, I think it was like no social media under 16 or something like that. I may be getting that wrong, so apologies. But there might be bipartisan movement on the teenager thing before a generic privacy bill, makes any progress, because it's the latter is much more complicated. But I guess only time will tell. So I'm going to call it here. So let's close this out. So Patience, thank you so much. This is a great conversation. You can find Patience writing, obviously, at the Wall Street Journal. Eric, thanks for being here.
Thank you, Patience.
Thank you, guys. Love it.
Thank you for subscribing to Marketecture. New interviews are added every week at marketecture.tv and your favorite podcasting app.